Welcome to our session of Business Startup Training. Today we'll be looking at the accounting equation. Now we know our accounting equation involves this, our asset, which is equal to our liability plus capital. Capital is slightly under the shadow. So asset is equal to liability plus capital. Now let's say we have a situation where we would like to invest, or we'd like to start a business, but we do not have cash to start the business, but we have an asset. Now let's say the asset is a house. So we would have the asset being the house. There we would have, let's remove this one, we would then have the house is fully paid for, so we have zero liability, and then we would have the house is worth 600,000, so we would have 600,000 in asset, okay, in capital rather. So the house, which is an asset, is zero liability, as we know, liability there, plus 600 in capital. All right. Now, one of the things we need to understand in a business is the fact that our capital could be broken up into various parts. So let's have a look at the idea of our capital being broken up. Now we know, let's bring it forward. We know our capital here. We know our capital, this is our capital here, is 600,000. So if we were to break it up into 6 shareholders, it would be 100,000, 100,000, 100,000. So that's 3, 100,000. That's 4, 100,000. That's 5, and 100,000. So we have here the 600,000 being broken up into 6 parts. So one shareholder would get 100,000, another 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 shareholder, and another shareholder. So 6 shareholders would have 100,000 each in terms of their asset value, providing the owner, the original owner, has gotten equity, which could be cash injection from all 6 persons, or let's say all maybe 4 of them, and maybe he decides, okay, as an owner I'd like a third of the business, or I would like a controlling interest. So his controlling interest would be 100, 100, 100, which is in real terms is actually half of the business he would own, and then he'll give 100,000 to one shareholder, 100,000 to another shareholder, and 100,000. Now he is actually able to get the cash, converting his asset from not just a house, which is a solid concrete thing, but now he has 300,000 in cash, and this allows him to actually operate his business. I hope you're able to understand this principle. Like, share, subscribe. Thank you.